Hello dear students, I welcome you all to the official YouTube channel of Yashwantrao Chavan Maharashtra Open University. At the outset, I would like to congratulate you all for being enrolled to the MBA program offered by the School of Commerce and Management, Yashwantrao Chavan Maharashtra Open University. In this video, we are going to see the introduction to accounting, which is a part of your Accounting and Finance for Managers course. Course code is MBA 101. So let us start the video. Simply, what is accounting actually? Okay, in simple words we can say accounting is to record. Okay, what to record? To record the financial transactions. In our day-to-day life too, we come across various financial transactions. For example, if we purchase some sort of pen, paper from the stationery, it is nothing but an event occurred. If you purchase a pen from a stationery, you would pay something in return of what you get. Okay, so what this is actually a transaction. Okay, you are getting something and you are offering something. Okay, so the process of accounting involves a recording, classifying and summarizing of past financial transactions. Okay, in any firm, in any organization, in any enterprise, we come across number of financial transactions happening day on day basis. Okay, might it be the purchase of raw material, sales of goods, okay, sales of services, purchase of anything else. All these are financial transactions. Okay, it is most widely used information processing system in business. Why these financial transactions are required? Okay, why we need to record these financial transactions? Because we need to communicate our financial state. Okay, whether we are in profit, whether we are in loss, or how it is. So this has to be communicated to our stakeholders. In every business enterprise, we need to communicate these things to our stakeholders. So all the monetary events are recorded as transactions and classified into various accounts. So whenever you purchase something, whenever you sell something, all these things are recorded and are classified into various accounts. There are three types of accounts which we will be learning in the upcoming videos. Okay, for now you understand there are various types of accounts. An account is a statement related to a particular asset, liability, income or expense. Now say you too have an account. Okay, we have our personal accounts. Okay, likewise we have the company accounts too. We have the asset account, we have the liability account, we have the income account and the expense account too. For example, I have already given this example. Okay, when you buy or you purchase a pen and paper, it will be recorded in the account of stationery account of an enterprise. Okay, the account heads are then summarized and under related groups of that interpretation becomes possible. See, whenever we purchase something, whenever we sell something, likewise the transactions will be recorded. If we sell, likewise in this example we are purchasing, but we will see the example of selling. If we sell say any goods, where will the transaction recorded? It will be recorded in the sales account. Fine. So we'll continue with the meaning of the accounting. So we have already seen that accounting is nothing but is to recording. Here again, to be very precise, accounting is the process of identifying, measuring, recording and communicating economic transactions. We have seen in previous slides also. Okay, So what is accounting? Accounting is the process of identifying, measuring, recording and communicating in economic transactions. What we need to identify? See, again we go to the previous example. I have purchased a pen. So we need to identify whether it is being purchased, whether it is being sold, whether it is being bought on lease, whether it is being bought on any other thing, right? Or on debt, likewise. So we need to identify the transaction first, then we need to measure it. How we are going to measure it? We are going to measure it in terms of, say, money. For how much amount you have purchased the pen, okay, likewise. And then is to record. For recording purpose, what we do is we record the transactions in the particular accounts. Now we are purchasing something, then will be when will the record will be transacted in the, say if it is a pen, it is in the stationery account. If it is, say, a raw material, it will be in the company's capital account, likewise. Fine. So next we will see what has to be recorded. What to be recorded? All the financial transactions affecting the business have to be recorded. Fine. So whenever we do a financial transaction and it impacts our business, it has to be recorded. So, and when it has to be recorded? So it has to be recorded post occurrence of the event. See, whenever we are purchasing something or selling something, we won't be able to record the transaction. But however, after occurrence of the event, we can record the transaction. Fine. And how to record? Whenever a transaction occurs, it is decided in which account it is to be recorded. Okay. So we have already discussed about types of accounts, right? Initially. So whenever a transaction is being taken place, we will decide in which account this transaction has to be recorded. Next is value at which it is to be recorded. So all the ingredients of the financial statements are to be assigned appropriate values. Money is the scale of measurement in accounting, and we can measure only those which can be translated into money terms. See, whenever, see, what happens is we have goodwill in market, but goodwill cannot be termed in account of money. Okay, we cannot measure it in terms of money. So whichever event, whichever transaction which can be measured in terms of money, only that can be transacted or recorded in the accounting. Fine. So preparing statements. Income statement is prepared so as to calculate profit or loss during a particular year by summarizing all incomes and expenses. See, if what happens if we don't record the transactions, financial transactions, is we don't know whether our business is running in profit or whether it is incurring losses. Fine. Say for example, I am a producer of mobile phone. Okay. So for mobile phone, I would require raw material, I would require electricity, I would require manpower, I would require land, I would require machineries, and on all these things, I need to incur some cost, right? So this is the cost which I need to manufacture a mobile. Fine. So while I sell the mobile, say for per piece 10,000 rupees, if I am incurring 11,000 rupees for producing a product, and if I am selling it at 10,000, eventually I am into loss. Fine. For that reason, we need to know how much you are incurring on production of a particular product or service. So this is the importance of the accounting, why we need to prepare our accounting statement. Many of you have been heard about the balance sheet and all those things. So what are these things? These are nothing but financial statements. So what these financial statements do? Financial statements reveal your position, your liquidity, whether you are gaining profits or whether you are incurring losses. So this will be communicated to the all the stakeholders. So what the stakeholders are? The stakeholders are your employees, your customers, your suppliers, and board of management and whatnot. Fine. Now we'll see about evolution of accounting. So accounting has been practiced in India from since say ancient era. India has a very rich tradition of maintaining books of accounts, and they were named as chopadis. Even now, when you go to some remote interior parts of the country, there you will find we have that book, a red colored book. Okay. Recently, our finance minister Nirmala Sitharaman, she has to bought that chopadi in red colored cloth. Okay, tied up with a red colored cloth, and it was known as chopadi. So this was practiced in India since very ancient period. Okay. Also we had this hundis. There is a famous saying in Marathi, तुझ्या बापाची हुंडी आहे का? I must not use this thing, but yes, this is what we have. The hundi, something which has some say it was a type of financial instrument. Fine. And Kautilya, the famous Kautilya, also known as Chanakya, he has wrote a book, famous book named Arthashastra in the 4th BC before Christ. Fine. So that was the first of its kind of book which was written by Chanakya, and it was uh, very much helpful for the uh, people in that era who run their businesses. Okay. But when coming to the modern accounting, Luca Pacioli. Okay, Luca Pacioli. Just I'm unable to spell it out very correctly. Okay, correct me whether if I am wrong. Luca Pacioli, 1445 to 1515. He wrote a book on accounting, and then he was known as the father of modern accounting. Okay, and in today's world, technology driven world, we can observe that we are observing computerized accounting practices being uh, practiced by the business firms. So thank you very much for your patient learning, patient hearing, and I hope you have got some insights about introduction of the accounting, and I'll conclude my video over here. Thank you. We'll be again meeting in the next video. Thanks again.